Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, its weekly commentary as a basis for this update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 was up a solid 1.6%. The Canadian stock market was up 1.4%. Last week was busy with earnings reports for the Q3 season, and so far, according to Refinitiv, 81% of the companies reporting their Q3 earnings have beaten expectations. This next week comes up, is going to be a busy week for earnings. And we're seeing some big hitters come out and report their earnings. We've got Apple, Microsoft, Alphabet, Google, Amazon, and Facebook as well. We're getting close to the start of November, and the next Fed meeting is on November 2nd and 3rd, and investors are already getting a little bit concerned about what could take place in this meeting, so it's driving a little bit of concern with some investors in this market. Last week we did see HAC increase its holdings in the S&P 500 as we get close to the start of that 6-month favorable period for the stock market. Did decrease its holdings in the consumer staple sector. Now, the consumer staple sector seasonal period ends in late October, and the sector has been lagging a little bit recently. HAC also did increase its position in the uranium sector last week, and it took on a new position in semiconductors. Now, semiconductors have a strong seasonal period from late October into early November into mid-November, and it can run a little further than that. It's a fairly short seasonal period, but we can see some momentum for that trade overall. Last week, we did see HAC increase its position in the Canadian banking sector. Actually, it took on a position in the Canadian banking sector. The Canadian banking sector has a strong seasonal period from mid-October into the end of the year. And recently, we're starting to see some stability in the Canadian banks. As a result, HAC took on a position in the sector. If we take a look at the market action last week, here we can see that this is the S&P 500 daily action here. Monday was up, Tuesday was up, Wednesday was up, Thursday was up, and then we saw a slight pullback on Friday. So overall, a fairly good week as we saw some solid action for the stock market last week. If we take a look at what happened with the yield on the 10-year Treasury note, we can see here that it was fairly flat on Monday. Tuesday was positive, flat coming into Wednesday. Thursday went up and Friday down. Overall, the yield on the 10-year Treasury note closed up at 1.66%. Now, this is interesting because if we take a look at the sectors of the market that did well last week, here's the S&P 500 as a reference coming in at 1.6%. Here, in this case, let's highlight the defensive sectors of the market. Look at this. Here's real estate. Solid performance last week. Now, consumer staples did not do well. It was positive, but fell short of the S&P 500. Healthcare did extremely well, and also utilities. So overall, the defensive sectors actually did well in a rising market and also rising rates, which is an interesting combination. It could be telling us that there's a little bit of concern with investors right now. If we take a look at the cyclicals in the stock market, so the cyclical sectors, financials did quite well. The energy sector, positive, but lagging the market. We've seen strong performance from the energy sector recently. Last week was a little bit of a laggard. Now, I got to say, on a seasonal basis, the energy sector tends not to perform that well at this time of the year. Now, there's a lot of other stuff going on with the energy sector, of course, but overall, on a seasonal basis, it tends to lag the overall market at this time, on average over the long term. Now, we saw the material sector positive, but once again, it lagged the S&P 500 and industrials went ahead. So a mixed performance with the cyclical sectors of the market. And if we take a look at the growth sectors of the market, we had solid performance from the consumer discretionary sector. Technology was about the market, approximately performed as the market. Look at the communication services. Now, this was down. It was positive, but barely. Now, it's going to be interesting because we have Facebook, which is in the sector, the communication sector, and Google reporting this week, Alphabet reporting this week, and they make up almost half of the communications sector when you're using the, in this case, we're using XLC as the ETF to represent that sector. That's the Spider's communication sector. So this sector here, down last week, positive but not a strong performance. Investors could be getting a little bit concerned overall. Also, too, as well, we do have Amazon coming out with its earnings this week, and that almost makes it 25% of the consumer discretionary sector when we're using the Spiders ETF XLY. So what's going on in the markets this week? Well, it's a busy week for earnings. It's going to be interesting to see investors' reaction to the earnings that are coming out this week. Could provide a little bit of volatility. It's a very busy week actually for earnings. Investors are also looking forward to the next Federal Reserve meeting, which comes up on November the 2nd and November the 3rd. And the Federal Reserve would make any announcement on Wednesday, November the 3rd at the end of their meeting on as far as quantitative easing goes, if they're going to taper that process or not. And last week we did see Powell come out and talk about it could be time to actually start tapering the quantitative easing program. So I wouldn't be surprised to start to see more brokerage houses coming out and making predictions about if the Fed is going to taper. Are they going to taper bonds, or is it going to be mortgage-backed securities? How much are they going to taper, and start to set up some real expectations this week for the following week? And that could provide a little bit of volatility in the marketplace. Investors are going to wonder if that's already priced in or not as well. So it's going to be an interesting time. On a seasonal basis, we are coming up to the start of the 6-month seasonal period for the stock market, which runs from October 28th until May 5th. Now, we have seen the stock market actually, did very poorly in September, and we've seen the stock market come back quite nicely in October so far, but that doesn't negate the strong seasonal period for the stock market. It doesn't mean that the stock market is going to go up over the next few months, but on average, this tends to be a better time for the stock market in November and December. In fact, they're the two best contiguous months on average over the long term. So we could be stepping into the market actually moving higher from where it is in the near term. So it's going to be interesting to see what happens this week. Thank you very much for joining me today.